Hello, dear traders. Analysts define the current geopolitical situation as the boiling point. It's also true for financial markets. Further developments will prove if they are right. Market participants are full of hope that common sense will notch up a victory in the turbulent time. No wonder investors prefer to play safe. The S&P 500 has slumped more than 10% since early January. Such a dramatic fall was last seen back in 2020, when the global economy was badly braced by the COVID crisis. So analysts are drawing a parallel. A new wave of hostilities was triggered by the fact that the Russian president recognized the sovereign status of the two regions in East Ukraine held by the separatists. The next step for them was to obtain permission from the Russian Federal Council to greenlight the deployment of Russian troops in those regions. The Kremlin has already made an agreement with the self-proclaimed republics on military assistance. In other words, they are able to unleash war from the independence anytime. Formally, Russia has to provide its military. In this context, the Minsk agreements lost their legal force. Even though Russia had not deployed its troops in the rebel republics, the West decided that the invasion was already underway, so the top-level talks between the US and Russia have been cancelled. Besides, German Chancellor Olaf Scholz halted the launch of the gas pipeline Nord Stream 2. In essence, once Moscow acknowledges independence of two regions inside Ukraine, this decision undermines the integrity of Ukraine and the post-war borders. The UK has also slapped sanctions on some Russian entrepreneurs. Tougher sanctions will follow in case of a full-blown armed invasion. As expected, a series of bearish waves hit global financial markets due to escalating geopolitical jitters. The US stock market was no exception. On Tuesday, the Dow Jones closed with a 1.4% fall, the Nasdaq closed 1.2% down, and the S&P 500 also declined by 1%. With the overall slump of 10% since early January, analysts warned that the correction could turn into a downtrend. In practice, there is nothing extraordinary in investors' behavior amid the Russian-Ukraine crisis and the looming rate hike by the US Fed. Meanwhile, business activity in the United States is getting back on track at a fast pace. Yesterday, traders found out that the manufacturing PMI climbed to 57.5 in February from 55.5. The services PMI jumped to 56.7 from 51.2 a month ago. Thus, the US economy is on a sound footing. Nevertheless, market participants are still selling risky assets. Today, the S&P 500 managed to gain ground following the previous nosedive. The index grew to 4,319. Let's see if it will be able to halt in the corridor between 4,280 and 4,350. The US dollar is benefiting from the ongoing geopolitical tensions. However, the euro and the Australian dollar showed resilience. As a result, the euro-dollar pair has got stuck in a range, as the euro's weight accounts for almost 57% in the basket of six major currencies. The US dollar's index has been trapped in a range between 95.70 and 96.30 because of the euro's influence. Being the traditional safe haven asset, the US currency is still trading high at about 95.91. As soon as financial markets regain optimism, the US dollar is set to lose in value. Experts do not foresee any painful declines in the US dollar for obvious reasons. Whenever the US dollar index hovers in the flat market, the USD CAD pair continues trading in the fashion of the previous days. The currency pair has nearly showed the upper border of the corridor between 1.2600 and 1.2800. Technically, the pair is at a crossroads. On the one hand, the loonie finds support from elevated oil prices. On the other hand, the greenback is propelled up by rising yields of US treasuries. By and large, the impact of treasuries outweighs oil prices that are now trading at the levels of 2014. After a climb to 1.2771, the USD CAD pair turned lower, now consolidating at nearly 1.2686. While financial markets are trading in the red, the flagship crypto has got stuck in a range bond market. The story about freezing Bitcoin accounts in Canada has its sequel. Earlier in February, when Canadian talkers protested against COVID mandates, their supporters collected almost 20 bitcoins. The police blocked accounts with the cash donations. However, it was not that easy with the crypto accounts. Nevertheless, after the emergency situation had been declared in Canada, the police cleared out downtown Ottawa and the bridge that connects the United States and Canada. However, the digital tokens in the trackers' accounts revealed the transactions in 30 crypto wallets. 0.11 tokens are now left out of 20 tokens in the accounts that have been arrested. The owners received notice that such tokens should not be withdrawn because it's considered felony. The situation proves that the government's ban on any cryptocurrency ends up in vain. Bitcoin recovered yesterday after its plunge to multi-week lows. Today it's still trading below $40,000, but it's poised to overcome the upper border of the corridor between $37,691 and $40,000. So, the most popular crypto is about to regain bullish momentum. And that's all for today. Keep close tabs on global financial markets on InstaForex TV channel. Our analysts are always ready to answer all your questions. See you tomorrow.